Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate a daily income. My name is Matt, and in today's video, I'm going to go over the last 2 trading days. Yesterday, I was supposed to make a video, but I was smoked from being the on-call engineer at my job, so therefore I took it off and decided to recover. But then today, I am making up for it by talking about what I did on the 10th, and then we're also going to go over what I did for today, July 11th. So let's begin. First thing I like to talk about on my channel is my account value, more so that show you guys how much money I'm working with to produce this daily income stream. So right now I have $168,273.01. Now let's head over to spreadsheets and start talking about what I did at the micro level. All right, so kicking this off, the first thing I did for July 10th is I ran a cash secured put against the QQQ. I chose a strike price of the 554 when the QQQ market opened at the 555.25. Made $55, and then at the end of the trading day, it closed at the 555.47. So this cash secured put expired worthless, so that was good. Just locked in $55. Only thing I had to do is bring collateral, and then just made $55 off of that gain, so that was good. For the second thing I did for July 10th, I ran a QQQ covered call. I owned 100 shares of QQQ at the 553.42. Chose a strike price of the 548 because this is well above that strike price. And the way I operate for Project Premium Harvest is I don't choose a strike price that is below my cost basis. And since the QQQ only goes up in dollar increments, the minimum strike price I would have to choose before I lose money would be the 554. But for July 10th, I was not necessarily looking for a home run. I didn't want to get my shares assigned away because I already had 100 shares assigned away for me the previous day. So I didn't want to lose too many of my shares because I still wanted to run covered calls, and I still also wanted to run cash secured puts. I like running both. I don't like being dominant in one side versus the other. The QQQ closed at the 555.47, expired worthless, also bagged $49. Then I ran a cash secured put against the SPY, made $30 off of it. I chose a strike price of 621 when the market opened at the 623. End of the trading day, it closed at the 625.84, and since the market didn't go down to 621, that cash secured put expired worthless, locked in $30. The only thing I needed to bring was collateral. Bingo bango, that was fine. And then the last thing I did is because since I ran cash secured puts on the SPY and QQQ, I still had about $40,000 or maybe $30,000 of collateral available. So I didn't want to leave that potential sitting on the table. So therefore, I ran a cash secured put against Oracle. I used to work there, and I think it's a great company to invest in. So even if these shares got assigned away, I'd be fine. But for me running an option on Thursday, it had to be a 2-day long option because they expire at a weekly basis. So on Friday, so I would have to hold this cash secured put for about 2 days. So tying up about, $23,250. So I chose the 232.50 strike price. At the end of the trading day, it actually went down quite a bit. So it went down to 234.98. And this is definitely getting close to potentially getting assigned territory. And then luckily at the end of the trading day for Thursday, it was not assigned. But however, today for July 11th, the Oracle cash secured put did get assigned. So now going into Monday, I'm going to have 100 shares of Oracle that I plan on just running at the money. When I say at the money, at the price where I bought the shares in at. So at a minimum, I'll be doing somewhere around to 232.50 or higher than that number. Now, and then at the end of July 10th, I made $184. I will say I could have been more aggressive choosing strike prices for my calls and cash secured puts, but by Wednesday, I've already hit about $1,000. So I didn't necessarily need to push the envelope to gather more money. So I was just taking it easy. So usually when I take it easy, I'll range somewhere between, $150 to about $225. So July 10th was a $184 day. And then going into July 11th, I only ran 3 different options, 2 cash secured puts, 1 covered call. Both the cash secured puts were on the QQQ. So I kept it nice and simple because I got 100 shares of QQQ assigned away on Wednesday. I still wanted to purchase 100 shares of an underlying because I still have about $90,000 of cash on hand, and I would like to utilize that for investments instead of just that sitting in cash. So for this cash secured put, I was very aggressive. The market opened at the 553.33. I chose a strike price almost pretty much at the money at the 553. That netted me $125. The market then closed at the 5 554.21. So this wasn't a sign the market went up a little bit. So therefore, I didn't get the opportunity to get 100 shares to go into Monday. Expired worthless, 124 bucks in the pocket. Bingo, bango. The second cash secured put, because I didn't actually want this one to get assigned, I chose a strike price that was a little bit further away. I think the delta was in the 0.2 to 0.3 range. Chose a strike price of the 551, netted me $650. And as the first cash secured put was not like the first cash secured put was expired worthless, so was the second one. And lastly, I ran a covered call on the QQQ. Like I said earlier, I bought these shares at the 553.42. Chose a strike price to sell them at the 556. Market closed at the 554, expired worthless, made $46, and in total for July 11th, made $235. So with that being said, guys, going into Monday, I'm going to have 100 shares of Oracle, 100 shares of QQQ, and then I'd be able to run maybe 2 cash secured puts, one on the QQQ, one on the SPY, and then we'll see how the market plays out. But now let's head over to the other side of the spreadsheet and look at how the last 62 trading days have played out. I think it's been going pretty good. So let's go take a look at what the metrics are showing, because numbers don't lie. All right, guys, now that we are at the other side of the spreadsheet where we look at the macro data of the last 62 trading days, let's dive into it. For July 10th and for July 11th, we made $184 and $234 respectively. And for 2025, we hit $19,169.15 of realized gains. So I consider this both my premium income and then also my realized appreciation that once that gain of like the stock that I sold. So yep, made $19,000, loving it. And then if we look at that gain from when I first started April 11th to now, it's about 15% even. Looking at my trade win percentage, I'm winning 98.39% of my trades, 61 winning days, 1 losing day, which was back on April 22nd. And then for the total trading days, I have 62 total trading days. Going into the average premium per day, I'm making about $309.18 a day. Looking at the weekly premium, we're making about $1,474.55 per day. And we're estimated and averaging about, not estimating, but averaging about $5,651.88. Whenever we're done with the month of July, I'm going to change some of my spreadsheet numbers. So this is going to update because recently it's just been staying stagnant. For the section here in yellow, this is the average yearly premium I'm going to make based off of my account's performance. So what I did to come up with this $76,676 is I took the average weekly premium, multiplied it by 52 because there's 52 weeks in a year, and that's how we came up with this average number. And if you look at that as an average yearly percentage, we're going to net about 52% this year. And I've been tracking the range from the high to low, and it's been somewhere between 49% to about 60%. So this 52% is right on par with what I've been trading thus far. This goal here is a little bit obsolete because when I first started this, simple and straightforward options trading, just running covered calls and just running these cash secured puts, my account only had $86,000 in it. I put in a bunch of money, made a little bit of money, and the initial goal was $29,000. Like I said, we've already hit $19,000 and are well on our way to getting to this $29,000. We just have about $10,500 remaining. Still wanted to keep this here as a reminder of where we started and then where we can go as long as we're dedicated towards achieving our goals. Looking at this weeks left, we have about 25 weeks left in 2025. Well, since Friday completed, we are going to only have 24 weeks remaining. So theoretically, I still have the potential to make about $36,863. Or if on the conservative route, I'm usually shooting for about $1,000 a week. There should be, we'll change this to 24. Boom. So if we're looking at a conservative numbers, since we have 24 weeks left, multiplied it by 1,000 for that conservative number, I have the potential to make about $24,000 on top of this $19,000 I've already made. So that's exciting and something to look forward to. So I'm stoked about it. But why are we doing this in the first place? So personally for me, I don't want to wait 30 to 40 years before I retire. Don't want to put them into tax advantage accounts where I've made this money, I've let this money grow, and then I'm going to get penalized if I want to take it out early. That's a no-go criteria for me. I am, don't get me wrong, I'm still invested in those long-term investments, but this is a secondary account so that if I can be able to replace my W2 income with just my options trading that takes me 20 minutes a day, I'm going to try to figure that. I'm going to figure out a way to do that. And from what I've done so far, I think what we're doing here with running these safe options that aren't too risky and they are repeatable by the common folk like myself, this is our ticket out of here. This is the ticket out of our W2. This is a ticket to potential early retirement. So let's just talk about a couple numbers. I'm going to hit this 2025 number, 2030 number, and then 2035. And for fun, we'll see if I wanted to keep working for the next 30 years. We'll see what the numbers might potentially look like. So for 2025, the total amount of income I should be making is about $54,558.35. I will say this with a caveat. This number is based off of a 12-month period. So whenever 2025 concludes, I'm going to put the number here for 2025, enter the account value on December 31st, 2025, and then I'm going to sell lock these so it's not going to change. And then all of the numbers are going to be based, and then the remaining numbers like 2026 and on are going to be based off of what the account is performing. So that'll be a nice way to keep track of things. But yeah, 2025, theoretically, if I were to trade for 12 months, I would have, $75,000. But because the first 3 months I did not trade these options, the estimated income is going to be a little bit lower. But let's talk about taxes. So I'm a high income earner, and therefore I'm going to be in the 35% tax bracket. So I'm going to get wrecked on anything that I gain, which is fine. It's a good problem to have, first world problem, some would say. And so at the end of the year value after paying taxes, I'll have about $183,377.63. What I will say this for tax time, I'm just going to keep investing into this account until probably March of 2026 until I know how much taxes I'm going to have to pay, and then I'll pull it out at that point. So that's kind of how I plan for tax time. I mean, I'm wheeling and dealing covered calls all the time. So eventually some of my shares will get assigned. It'll free up the cash and it won't be a big deal. For 2030, so if I continue this strategy for, 4.5 more years, 5 more years, I should be theoretically making about $310,000 of annual income. And then at the end of the year value, I should have somewhere between $794,000. I will say this, people always call it out. This may seem a little too optimistic. We have been in a little bull market since the whole tariff correction. I 100% agree with you guys, but I'm just going to continue populating these cells with my trading performance. When the market goes down and my trading performance goes down, this will accurately reflect that, but I'm not going to come up with random arbitrary potential scenarios. So we're just going to use the numbers as we are seeing them. But I will say you should always plan for a correction, and I will call that out. There have been a lot of people in the comments section asking, what would I do in a correction? I'm pretty much going to do what everybody else does during correction time. You're just going to wait until the market recovers. At least for me, I'd be able to potentially make a little bit of income during that correction time, but I'm going to be waiting for the market to recover just like everybody else. I might wait a couple of weeks, might wait a couple of months for the market to recover. But if I want to make that income stream, I might just start selling my options below my cost basis. And then if I'm in assignment territory, so I don't lose money, I'm just going to roll the options out until I'm not going to be in the threat of losing money. That's kind of how I would play it. That's the scariest scenario is market goes down. You're making bad premium because your dollar cost average is a lot higher than what the market is trading. So I would probably take bad premium for maybe about a week, maybe about 2 weeks, maybe about a month if it's not too bad. But if it's significantly bad, like we're down 10%, 15%, 25%, I would probably start risking selling options below my cost basis, which would then lead me to have to be ready to roll the options when the time comes if the market were to shoot up and recover. But ideally, the market would slowly probably trickle back up to being healthy again. So that'd give us plenty of time to then start choosing strike prices further away from the money. That's one of the reasons why I like running dailies, because you have the flexibility of changing the strike price you choose every single day versus choosing on a Monday, waiting for the week, and hopefully the options that you chose aren't going to get assigned. Just food for thought. But yeah, by 2030, that would be more than enough money for me to stop working. And ideally, I would like to have a house paid off, so I might just grind it out, make all this good estimated income, grow the account, and then once I were to have a house fully paid off, that would be a good point for me to stop working, because then all of this money is just straight gravy. So then by 2035, so I'm currently 31 years old, about to hit 32 sometime October. So if I grind it out for 10 years, I would be making about $1.3 million as it stands. And then the account would be valued somewhere at $3.4 million. And like I say in most of my videos, even if this is half of that number, I still think it would be totally worth it, right? If we can have $1.7 million in an account and then getting, was half of 1.3, $650,000. That's a freaking fantastic number. Even if the account is, by the 2030 numbers is at 2035 at 700, that still would be plenty of money, guys. That's still more than enough. So that's something exciting to look forward to. And if I decide to, work until retirement age of 59 and a half, this seems a little too unrealistic, but making 1.1 billion every single year would be quite fascinating. And then the account would be somewhere around $2.9 billion. But hey, I'd have to pay $398 million in taxes. Yeah, that seems a little unrealistic. But like I always say, man can dream. And from what the data has been showing, that's what the data is. Let's take a look at the weekly numbers. For the weekly numbers, we are, since Wednesday, in the 4-digit club. So I'm super excited about that. So end of this week, we're at $1,400, which is pretty good. I usually shoot for $1,000, but then we hit this 1,441, which is on par with what our average is. So that's interesting how that works. So for the monthly tracker, for the month of July, we're already at $2,213. How many trading days do we have left? 5, 10. Still have about 14 trading days. So we still have a lot of opportunity to make more money, guys. So that's quite exciting. And then, as I mentioned earlier, the yearly tracker, we're at that $19,169.15. Next week's gonna be exciting. We are potentially gonna hit the $20,000 club, and I cannot wait. I'm not going to talk about what I plan on doing for next week because it's too early to tell. Might make a video Sunday, might not. So stay tuned. Yeah, guys, that's pretty much the video. Let's stay locked in. Let's stay disciplined. Let's stay harvesting. Mat out, and I'll see you at the next video.